For years, we heard the same story. Bitcoin is digital gold. It's the king, the undisputed leader, and everything else is a speculative bet. But what if that's not the whole story anymore? What if this summer the student is finally overtaking the master? It's happening. In the last few months, a powerful, silent shift has begun. Ethereum isn't just following Bitcoin's wake, it's charting its own course, propelled by a perfect storm of forces that are rewriting the rules of the entire crypto space. This isn't just about price, this is about a fundamental change in what we think a digital asset can be. So, let's pull back the curtain. Let's dive deep into the numbers, the technology, and the power players to uncover the biggest story of the summer, the story of how Ethereum is officially going for the crown. First, let's talk about the price. This summer, Ethereum's price performance has been nothing short of explosive. While Bitcoin was busy making its own record highs, Ethereum wasn't just tagging along, it was putting on its own show. In a key period, while Bitcoin had a great run, rising around 35%, Ethereum, the so-called follower, rose a stunning 39%. It didn't just match the king, it surpassed it. This price action tells us that investors are no longer seeing ETH as just a speculative asset. They're seeing it as a powerhouse in its own right, with a value proposition that goes way beyond anything else in the market. But why? The secret isn't just about demand, it's about a revolutionary, self-inflicted supply squeeze. Imagine a digital furnace. With every single transaction on the Ethereum network, a portion of the fee is thrown into that furnace and permanently burned. This means the more people use Ethereum, the faster its supply shrinks. Utility is now directly linked to scarcity, and it gets better. A whopping 28% of all ETH is currently locked away in staking contracts. That's a massive amount of supply that simply cannot be sold. So you have a network that is literally eating its own supply. And then you have investors locking up a quarter of the entire total supply for years. The amount of ETH sitting on exchanges has plummeted to just 4.9% of the total supply, a 10-year low. If you're finding this video insightful, please hit that like button. It helps me know you want more deep dives into the crypto space. So who is taking notice of this powerful dynamic? The smart money, Wall Street, the institutions. The data is undeniable. US spot Ethereum ETFs have recorded billions in inflows. In a single day, one fund, BlackRock's ETHA, pulled in over $639 million. This isn't retail FOMO. This is institutional capital flooding the market at a breathtaking pace. Perhaps even more telling is the rise of corporate treasuries. We're seeing companies like Bitmine Immersion accumulating over 1.15 million ETH, valued at over $4.9 billion. When a corporation puts a multi-billion-dollar asset on its balance sheet, it is making a statement that it views that asset as foundational. It's a stamp of approval that Ethereum is now getting at an accelerated rate. The real magic of Ethereum isn't in the coin itself. It's in the world it's building. Ethereum is the bedrock of the entire Web3 revolution, the digital operating system for a new kind of internet. The applications being built on it are booming. We're talking about over 50 million active users interacting with dApps in everything from decentralized finance to gaming to artificial intelligence. To handle this boom, layer 2 scaling solutions are the key. Platforms like Polygon and Arbitrum are offering lightning-fast transactions with fees so low they're practically zero. It's not just a digital asset, it's the infrastructure for the entire digital future. A full honest analysis requires us to look at the other side. A recent study found that a shockingly small group of just 11 deployers control over 50% of all active smart contracts. This concentration of power could create a single point of failure. We also have to talk about hacks. In a single quarter of this year, the Web3 space lost an astounding $6.3 billion to hacks. That's a 215% increase. It underscores a critical truth. While the technology is powerful, the security risks are very real. It's an ongoing battle that developers and auditors are fighting every single day. So, with all this information, where do we go from here? The forecasts are stunning. Analysts from major financial institutions like VanEck and Standard Chartered are projecting Ethereum to reach anywhere from $10,000 to $20,000 by the end of 2025. By 2028, Standard Chartered sees a target of $25,000, and by 2030, VanEck models project a bull case scenario of over $51,000. Bitcoin may be the digital gold, the simple, predictable store of value. But this summer, Ethereum has proved itself to be something more. It's the digital infrastructure. Its unique blend of dynamic scarcity, institutional backing, and a vibrant utility-driven ecosystem positions it uniquely to challenge and potentially surpass Bitcoin in influence and market dynamics. If you found this video insightful, please consider subscribing for more deep dives. And for the full detailed report with all of our research and sources, please visit the link in the description below on the Zalwora portal.